Greetings, members one and all of the Salivation Nation. What will it take for silver to reach $50 again? Let's explore! With the silver squeeze waning dramatically here, after its attempt essentially to move the spot price, it did nudge it a bit back in, between February and March of this year, 2021. There are some other factors, and some people thought, well, we are going to hit record levels again in silver like we did with gold in the previous year, in 2020. But that never materialized. So we're going to kind of take a look and analyze a little bit what caused silver to hit $50 in the first place, and then see if some of these same factors are there and triggers and catalysts that could cause silver to rise up again. And we're going to be referencing an article here from Bullion Vault that talks about, that date when it got very close to $50 an ounce. In fact, it got to $49.80 an ounce on April the 25th, 2011. And a lot of the factors that many traders were looking at was the gold to silver ratio, and that is something that you've heard me talk about a lot. Now, there are some stackers out there that feel that the gold to silver ratio doesn't matter at all, but I believe it does give us an idea or an indication as to where the markets are going to move, because remember that there's a lot of psychology in the markets. And with the ratio being as high as it has been recently, and in fact, in March of 2020, when we saw a flash crash of gold and silver, we saw the ratio spike up to about 125 to 126 to 1. You want to talk about undervalued asset, many people felt that definitely silver was at that time. And that is something that should be considered when as one of the catalysts for silver to reach $50 again. And it's this belief, that the undervalued silver, especially compared to gold, that reached all-time highs nominally, is what was going to lead to this rush to the price of silver to catch up with gold. Even though silver hadn't been so expensive in terms of gold for so long, and even the dollar prices had doubled inside of 6 months, some traders felt at the time that the move wouldn't be complete unless silver traded above $50, just as it had in 1980. The silver market environment of 2011's run to $50 per ounce was very different to that back in 1980. The principal driver back then was much more simple. It was the continued inflation we saw in consumer prices, which a lot of that we are starting to see right now, and that's making a lot of people nervous. But it's more along the lines of the attempt of the Nelson brothers to corner the silver market, an attempt eventually brought to an end of the efforts of the Federal Reserve Bank and certain members of the Commodities Exchange. But after, and 30 years later, the global economy again faced serious concerns, not so much with inflation, but with the U.S. economy reeling from the mortgage crisis and the 2008 Lehman Brothers collapse. And we also had situations where the Eurozone was under threat. We had nations like Greece, Ireland, Portugal, Italy, and Spain had serious problems with their finances. In the United States, confidence in the economy continued with record lows. The news out of Europe only heightened concerns of another financial crisis. And I remember those times very clearly. The Fed announced another round of quantitative easing beginning in November 2010. I think that was the second round of quantitative easing. Silver coin sales by the U.S. Mint hit a monthly record, surpassed only by early 2011 surge in private sector investor demand, because this new quantitative easing meant printing more dollars, and essentially it's not just the printed dollars, it's also the digitization of those dollars. In the minds of many investors, the dollar was under the gun, seeking safe haven assets likely to hold or grow in real value during the prolonged inflation became of paramount importance. And that happened with both silver and gold. Internal to the silver market, there were reports that seemed to support a bullish long-term view on silver's industrial demand. And these are a lot of the same things we're seeing again now. The photovoltaic industry for once began consuming silver in much larger quantities than in previous years. Solar panel production starts with silver paste, and that requires a finer grade of silver than the main wholesale market trades, at least at that time. And that is the 4/9 fine silver, which we're seeing much more commonplace nowadays than back then. And the silver that you're looking at here now is older silver, and all of this is 3/9 fine silver, save for this constitutional quarter there. That's 90% silver. It drew a lot of attention because there was no shortage of the more common 3/9 fine bars. There was a shortage of immediate supply of the higher purity. And because of the growing demand and the coincidental rise in the silver price, that story stuck. So essentially, it was a perception of a silver shortage that was not there. Heraeus Precious Metals of New York, the vice president, was asked about this myth, the idea that photovoltaic industry was driving the silver price for clients starting in 2011. The bottom line was that the solar panel demand was only the beginning to fill the major hole left in silver offtake by the ever-shrinking photographic industry. So that was a unique to that time, and we don't have that today because that has been long past. And by the way, 4/9 fine silver is much more commonplace these days and utilization in the photovoltaic industry, but we're still going to probably see that continue to just rise up in demand. The physical supply anomaly between standard wholesale bars and the finer 4/9 fine purity did give the impression that stockpiles were tight. And that was, I think, was part of what led to kind of the panic in the prices. And so when demand exceeds expectations in physical goods, often it is difficult for the manufacturers to meet new customer orders quickly. If that makes supply become sporadic, it gives the impression that there is a shortage of raw materials, when in reality there is only a shortage of product. You've heard me talk about that ad nauseum. There is no silver shortage, as was perceived by this community and in the silver squeeze movement, thinking there was a shortage of supply. It's just a tight supply of product. So silver prices headed for $50 per ounce, with the idea of vanishing silver supplies rather than just tight supply of product, small bars or coins, was frequently promoted by many retail distributors or bullion dealers. Backwardation is when the price of silver in a future month is cheaper than the spot or immediate month. Silver futures normally trade in an inverse position because the seller of the metal has to pay the cost to carry the inventory until settlement, and those costs are reflected in the price. And by the way, the premiums we saw skyrocket. In fact, we did see a tremendous spike in prices in the wake of the silver squeeze movement, which was on the piggybacking off the already increased demand for silver investment products such as bars, rounds, and coins from the pandemic. And what did that do? It increased the premiums to where prices of silver were nearing $50. In fact, it was not uncommon to see $38, $39, $40, $42 silver eagles at the time. And that was not due to the spot price, it was due to the premiums. Spot price moved, but not so much. So essentially, I believe what happened during the silver squeeze movement was that they probably learned from what happened in 2011 and realized, hey, it's not the same type of deal. They're not looking for 3/4/9 fine silver, and the market, the general market, in the exchange exchanges and in terms of the futures and the like and the paper derivatives, which there's a lot more of, you're not testing the physical to back it. If everybody that had those derivatives demanded the actual physical silver, well, you would not just see $50, you would see skyrocketing prices of probably hundreds of dollars, if not maybe even $1,000. Who knows? But the thing is that market will never be tested, so that's why you can make such crazy, insane price predictions if they were to test the whole market, because the derivative market is so much larger. But those people don't care about getting the physical. Most people who invest in silver as part of their portfolio, and by the way, yes, I did use the word investment because they're using it essentially in some ways. When you have something with very low overhead, where you're not cashing it out for the physical, well, you can kind of strategize with it, or you can also hedge it in the paper markets against the other stocks and positions that you have that are more risky. But none of them care about having a bar in their hand. They don't care about getting this bar. They don't care about a coin. They don't care about eagles or mintages or demand for this stuff. They want to be able to get themselves in a cash position, which is why in March of 2020, when there was this flash crash, people were running to not the safety of silver, which is what they should be thinking about. No, they ran to the safety of, wait for it, they ran to the safety of cash. That's right, cash in hand, because in the end, when it's all said and done, cash is still king. Now, that is going to lead me to my second point here, and that is what could get us to $50 of silver again. What is unique about this time that's different in 2011? In 2011, it was about this perceived shortage and concerns about the economic situation. Well, right now, those economic concerns are exacerbated because we are much more in debt now. There's a lot more federal spending. Quantitative easing and not to infinity is going on. So in other words, the safety into this is under greater threat now than ever before. And again, I'm one of those that has said, and I've talked about it in a prior video and several prior videos, that I believe that the dollar, yes, this Federal Reserve note made of cotton and linen fibers is indeed money. But it is what I refer to as bad money. A lot of people refer to it as bad money. Gresham's Law refers to it as bad money, and it has driven out the good money. That's exactly what happened in the derivatives market in March of 2020. Good money drove out bad money, so people ran to the safety of this in a panic. Don't panic, folks. I think that's the lesson learned there. But regardless, this that you see before you here, this silver, is really the most stable form of money out there, although silver is not perceived in that way, even less now than it was in 2011 when it reached $50 before. I refer to it as hibernating money that's essentially asleep, and what will wake it up? What will wake it up is either a realization of the general public, and I'm not talking about us, I'm talking about the general public, that it is money, that they recognize it as money because it has been used for literally thousands of years. This constitutional silver quarter here is circulated. It's been in people's hands. To me, that tells us that we are looking at something that was used as money and recognized as money, silver, for thousands of years. And in 1925 and through the 30s, when this was used and spent in daily transactions, it was common knowledge that this was indeed money. So I think when people start to realize that in mass, it is going to essentially drive up demand, and people will start to accumulate it as a way to protect themselves against economic instability and the dollar itself. And that is what is going to push silver up to $50 again. And if it does get to $50, it's not going to just stay there. It's not going to just fall back down. We won't see that backwardization that we're talking about. It's going to be a sustained $50 per ounce. But that is a paradigm shift in thinking. And when what we're starting to see in the world today, especially with the reset that they're talking about doing, now some people call it the Great Reset, and I believe that is a part of it. It is a global scheme that will involve social credits and other factors that will greatly increase the powers that be, the governments and banking institutions, to track your purchases, which, by the way, a lot of them are already tracked in many ways, but it will be a point where you won't have no other option but to use their system. Now we have options, and this is why cash is still king. That's why the dollar is still what it is, because we have the option to use cash, which is untraceable. And so therefore, we want a slow move up to $50 an ounce for it to be sustained, and that is what could cause it to happen. $50 an ounce, and sustained silver being recognized as money again by the general public. Post your thoughts in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.